Hello, everyone. Welcome to the latest webinar from Silver Hill Funding, Sourcing 101, the key to securing more commercial deals in 2022. My name is Zach North, the marketing director here at Silver Hill. I'm joined by Juan Barcelo, our head of sales, and Joe Altamonte, our head of business development. Hey, guys.
Hey, Zach.
Hey, Zach, what's happening?
Hey, hi. So I'll tell you that internally, I number these webinars, and this is webinar 45. So since we started doing these kind of educational presentations in 2016, we've done 45 now, and I'm super thankful that so many of you join us. Again, we've got record registration this time. I almost have to stop saying that because people are going to stop believing me, but it's true. A very large group today. Very thankful, means a lot, especially heading into Memorial Day weekend. So thank you so much. You could take the time with us. If you've attended all these webinars in the recent past, but invariably we get a lot of new people too. So just take a quick second to talk about the Silver Hill Wholesale Network. What this is comprised of our residential and commercial wholesale businesses. If you are a residential loan officer approved with Lakeview Wholesale in the past, you now have access to these commercial loan programs and non-QM solutions available from community loan servicing. So really great position if you're doing business with us on the residential side and you're interested in diversifying your business, which is what a lot of this deck is about. You have the ability to do that. So just take a quick second to explain how all that works. If you've been doing business with Silver Hill Funding in the past, we talk a lot about small balance commercial loans. That's what we're going to do today. Specifically, what we're going to talk about is how to source the business. I would say this is the number one question I've received from loan officers, from brokers over the years. Hey, where do you find commercial deals? Like, how do I find those? Like, where are they? And so we want to kind of demystify that today, talking about where the opportunity is, identifying the borrower needs, because I believe as a marketer, if you don't know who you're looking for, you'll never find them. How to source these opportunities, even within your existing network, even if you haven't done a bunch of commercial business in the past, we believe that you do have those opportunities available to you. And you kind of have to know where to look. And that's what we're going to talk about today. Of course, marketing your mortgage business. I will say over the years, I mentioned all the different webinars we've done. Our most popular ones have always been our Marketing Maven series. I want to bring those back, update it for 2022. But we're going to touch a little bit about marketing tactics for your business and finally give you next steps so you learn how to work with us today. With that, this is us. I think soon we may start bringing the camera into it. I would poll the audience, but I'm afraid of the answers we get if that's something you want or not. But here we are, Joe, Juan, and me. So without further ado, let's get into the opportunity. So I'm going to start with something you already know, and that's this article, a headline from the Washington Post earlier this month: rising mortgage rates starting to affect residential housing market. So average monthly mortgage payment for home buyer up 39% during the week ending April 24 compared to the same week in 2021, and applications have dipped. Now, this is something that we all know. What not everyone knows is what to do about it. And as one of the solutions we have for you today is the idea of expanding your product set with commercial loans. If you're already doing commercial loans, then you know about how this opportunity works. And if you've started to get into commercial, you may know a little bit about the next slide, which is that commercial multifamily lending surged in the first quarter of this year. So loan officers, originators, your colleagues are seeing the opportunity. The volume of commercial multifamily mortgage loan originations jumped 72% in the first quarter of 2022 compared to a year earlier. As the traditional business might be slowing down, everyone's going to look for the next thing to do. What's the next opportunity? And for many people, that's going to be commercial loans. And so for us, we find ourselves in this position where we can educate, hopefully inspire, show you where these deals are and how to get them. And we've got the experts on the call today to help you do that, which is really cool. So with that, I'm going to touch really quickly on why diversification is such a good idea. obviously, we're talking about protecting your bottom line, expanding your product set, being able to say yes more often. I think that's so important for our industry, is being that person who's able to have a solution for people and for more people. And as we know in our business, you have so many different types of requests. Every situation is unique. Being able to say yes, referring to colleagues is great, a great way to build relationships. But a lot of times you want to be able to say yes yourself and say, oh no, normally in the past I might have sent this small office scenario to my colleague. Today, I feel like I can do that myself. We're going to show you how. And of course, maximize comp. If you've done a more residential business, maybe you've never closed commercial loans, you might not know how compensation works, and we'll explain that to you and show how you actually have an opportunity to make a lot more on the commercial loans, which is attractive for obvious reasons. So with that, we always like to start with this poll question. The reason why is because and you'll see in a second, we want to know what kind of business you do. And that's going to help steer this conversation. If we've got a mostly residential audience who's new to commercial loans, we'll get a little more educational. If we have a lot of people who have done business, they're looking to do more or looking to learn more about what we offer, then we can tailor the presentation that way too. We're just trying to be as helpful as possible. And so with that, let me launch it. You should be seeing that now. And we're just going to give everyone a few seconds to answer. Joe, I'm not going to make you guess, but I'll tell you that around 50% have not closed a commercial loan last 6 months. So we've got some people who are new to commercial lending on the call today, which is great.
Yeah, that's perfect.
Just going to give a few more seconds. So while we finish up here, what's interesting is that, over half have not closed a commercial loan last 6 months. The second highest, about 37%, 1 to 5. And so we see that makes total sense too. Maybe you've closed one, maybe one which is kind of on your desk, so to speak. And so you thought, maybe I can do this again. Maybe I can do this more often, or make this a larger part of my business. And that makes a lot of sense too. So hopefully we show you some tools, provide a little bit of education to make commercial a bigger part of your business and something you focus more on each month. So thanks for everyone who took that. I'm going to close it out. And I think we're back. So with that, we're going to talk about identifying borrower needs. And for that, we're going to bring in Juan. Juan, can you take over now?
Hey guys, yes, absolutely. So thanks for having me, and again, thanks everyone for their time on this beginning of this Memorial Day weekend. So just really want to focus on some of the different scenarios where borrowers fit, right? So as Zach mentioned, it's kind of like looking around and looking for the right prospects. So understanding what those challenges are with some of these borrowers can help you kind of get to the right place with them, and then put them in the right product given their circumstances, right? So some of the different scenarios that we see with these commercial loans are, owner occupied, right? So your small business owner that occupies their property. Traditionally, the Small Business Administration loans are loans that are guaranteed, that are done by banks. And a lot of paperwork involved, a lot of fees involved, and very strict underwriting. So what happens is, some of these small business owners, they just fall out of that SBA product and just can't become eligible, can't do a loan. So that is your typical owner occupied, shop, mom and pop shop, your retail, your small restaurant, your pizza shop, your ice cream store, your small hardware stores, stuff like that. These are great prospects. Even, dentist offices, doctor's offices, lawyer offices, folks that occupy their own property that just can't get underwritten under the SBA program. The other borrower profile that we see that fits is folks that go to the bank, right? People usually start at the bank where they have their business banking accounts, and banks typically only go to 65 LTV, maybe 70%. And usually they want to do loans that are over $1 million. So our typical focus is really in those borrowers that have these properties that are under $1 million. So when you're under $1 million, the bank's going to be very strict with regards to leverage and underwriting and everything else. And so, maybe these borrowers need a little bit more than 65, maybe in the 70 to 80% range. Okay. Another borrower profile is that borrower that maybe their tax returns don't show their true income because of the way they file, because of the type of business they have. And so, or maybe their business is more of a cash business and doesn't really report all of their income on their tax returns, right? So, despite the fact that those are rules, that's allowable, when you go get a loan, the bank's really looking for some meat, if you will, in those tax returns, some income. And so those are situations as well that fit. Okay. And then finally, borrowers looking to cash out equity, right? Most of you are familiar with a cash out on a residential property where folks live, but on a commercial property, whether it's an investment property, residential investment property, or it's a commercial property, there's an opportunity with our program to take some of that equity out and to use it for reinvestment. Okay. Many of our borrowers, if they're small business owners, they will reinvest it in working capital, inventory, business expansion, payroll, any one of the number of things that they need for their business. Or for our investors, they'll just cash out from one property and go buy another property. Okay. And then finally, a lot of folks that are especially in the real estate investment world, the residential investment world, some people call it rental loans, DSCR loans, whatever. Some of these folks, they move into properties quickly, and so they get what are called bridge loans, or some people call them hard money loans, where it's a short-term, high-interest rate loan. They have fixed the property, or they have occupied the property, remodeled it, and now they're ready to rent it for the long term, and so they want to come off of this higher interest rate loan. So that's another scenario, another borrower profile that exists out there that is a good fit for the kind of stuff that we do.
Great. Juan, I'm about to go to the next slide, but just really quickly answering a few questions I've seen here. This webinar is being recorded, and we're going to email it to each of you tomorrow. So, of course, don't feel like you have to take all the notes right now. We're going to send this along, the full recording. You'll get the debt. You can see the whole thing and review it again later. So just want to make that clear. There you go.
Okay, so it's important to make a comparison now. If you're going to go talk to these borrowers in their different places, to understand what are the competitive pressures out there, right? Like we talked about banks, right? Yeah, you'll get the lowest interest rates, but then the underwriting is harder. The application process is longer. The loan takes longer to close. Most banks close in 90 to 120 days. With the SBA, that are done through banks, and some non-banks also do SBA loans. But again, the SBA has a very strict eligibility criteria, a lot of documentation. Many times there's double the fees being paid because it's two different loans that are structured in an SBA transaction. So again, yes, sometimes you get lower rates and other things with a bank, but then there are the other issues, right? And those are the cons, right? The process is longer, more involved, more documentation, stricter underwriting. The box is a lot more tight, and sometimes, I should say many times, borrowers just don't fit that profile, okay? With agency, you're gonna, most of the folks that are doing residential are used to agency being more owner occupied, some investor. On the commercial side, there is an agency product, but it's tailored more towards um, large multifamilies. So large multifamilies over $1 million, it's like $1 million to $7 million. That's a Freddie Mac, Fannie Mae product. So multifamily property apartments, very strict around occupancy requirements. Obviously, they need to be larger loans. Those are more complex transactions that require net worth of the individuals, financing, a lot more complicated and very, very different. And then you have non-bank lenders, and we're certainly not the only ones. And there's a lot of private individuals and private lending shops that are out there that are doing loans similar to what we do, okay? So those processes are a bit more streamlined, a lot less documentation. There's really no depository relationships required as there is with a bank. You know, whenever you do a loan at a bank, they're gonna wanna open a bank account for you, savings, business accounts, etc. So there's no strings attached, as they say, with non-bank lenders. Now, the flip side of that obviously is, look, you're going to pay a little bit higher rates. Some lenders charge fees. We don't charge those lender origination fees. Other non-bank lenders do. Sometimes you'll get lower leverage as well, 65%, maybe 70, just like the banks. In our case, we can go up to 80, and in some cases 85%, given the property type. You know, so again, it's important to understand the spectrum of lending when you're talking about commercial. And the focus here is commercial property, right? Your typical apartment buildings, mixed-use properties, office, retail, warehouse, industrial, etc. And then your residential investment property, that whole very hot realm right now, where people call them rental loans or DSCR loans, etc.
Cool. One more here. Key takeaway.
So again, you know, when we started this business back in, let's say 2003, you know, our focus was this. Our focus was, you know, selling to residential brokers who wanted to diversify their revenue streams, who wanted to get into commercial, who wanted to stop saying, no, I don't do commercial, I don't do residential, and getting into this whole new world. But the important thing is knowing, you know, who to look for, who to talk to, where to find them, right? Who's that customer? That's my small business customer. Maybe your accountant, it may be your lawyer, it may be your dentist, maybe your doctor, okay? Or it may be some of the folks that you already have done loans for, right? And Joe's gonna talk a little bit later about looking up at people's REO schedules to identify if they have other property there, if they have investment property or commercial property. So the idea is knowing who your prospect is, you know, why they need your help and where you're going to find them, right? And so this presentation is all about that, right? We know that the residential lending business has changed with rates moving around. And by the way, rates have moved for everybody, including us. So that refi well may have dried up a little bit, and now it's time to look for a different kind of product to originate. And that's, you know, that was always our original reason to exist back in 03, and now again in 2022 we're coming around to a very similar cycle, and so that is why we're talking to everyone about this, and we're trying to educate folks on how to do this. Okay, so again, key takeaway is, you know, who are my commercial prospects, you know, where do I find them and what do they need, right? So very important to always start there to build your marketing strategy and to build your general strategy and approach to getting more of this business.
Awesome. Thanks, Juan. That's very helpful. That's great. So next we're going to talk about finding leads in your network. And for that, Joe's going to take it away, our head of business development. So it makes perfect sense. Joe, why don't you take us in, finding leads in your network?
Thank you, Zach, and thank you everybody on the call, especially late in a month with the holiday at the end. We really appreciate you taking the time and to learn more about this, because it benefits both you and us. And this quote on the screen is a pretty good segue into this section of the presentation. As you see from Ron Carr, the way you position yourself at the beginning of a relationship will impact you where you end up. And that really speaks to making a great first impression and providing value to those that you begin a referral relationship with. And we will expand on those things as we will right here. So you'll notice the referral partners on the screen. If you look across the screen, you're going to see things and say maybe to yourself, well, I do have realtors and I do work with accountants, and so attorneys are part of my network. Of course, you all work with title companies, and of course, sometimes you compete with banks. So are we saying that these are new ideas as far as who to talk to? That's not really the point here. The approach, though, and the message is something that's very different. And in fact, it's something you may not have been talking about, and it's all about awareness, letting them know what you do. And as Juan detailed earlier in the presentation, what you're looking for in a referral from them. So these folks are always open to hearing about something different. They have a dime a dozen of reps from companies like yours will come out and talk about the residential products that you do and try to differentiate themselves on a sliver of a percentage point, or on the customer service aspect of it, or the relationship aspect of it, which is all important. But now you have something materially different to offer them. We do commercial business. We do DSCR differently than some of the companies that you might refer business to, and we might be able to provide more yeses for you. Accountants have business clients and they have personal clients. So this could open up a whole new database from an accountant standpoint. Same thing with attorneys. Same thing with title companies, as they work both with, the residential aspect of what they do is completely different than the commercial aspect of what they do. So it's something that they're going to hear that's different from the many folks that approach them. And of course, banks. And the big issue with banks is who you talk to there. Because of the things that Juan outlined as far as banks are concerned, they do see a lot of turn down. And sometimes it has nothing to do with the things Juan outlined. It's because of the fact that the bank just doesn't have an appetite for the thing that we're talking about, which is small balance commercial loans. So always speak to the loan officer, because they have more invested in that program rather than maybe a vice president or a manager of that branch. So the loan officer, as you see on the screen here, has the ability and is the person that is front and center. So they are the ones that see and have to deliver the turn down news. They also are going to be very protective of their business from a depository standpoint. So it's not just that if the borrower walks across the street to Bank B that they might lose the loan. Bank B is certainly going to pitch that borrower hard on the depository business, and so they risk a lot more than just losing a client for that particular transaction. When we get into realtors, again, even if they don't work in the commercial space, realtors constantly get inquiries for properties that they might not do, and it might be a good situation for them to be able to at least be helpful to a client that they might help on a residential side, but not be able to help on the commercial side. So you can certainly always ask your realtors to make an additional connection for you from a commercial standpoint. You have residential investors in your client database. This is a really big opportunity that might not occur to you originally. So when you have residential investors, you may have a solution for them through your residential contacts from an agency standpoint or a conventional standpoint, but we can always help from an investor standpoint or a DSCR standpoint. But also, these folks might be small business owners. They might be investing in properties other than the residential stuff that you might be able to help them with. So it's always a good idea, and we'll give you some good visuals in a slide or two about what to look for on the 1003 or the IRLA to identify people that you're currently talking to that may be good prospects to talk about commercial business with that are already in your file cabinets, figuratively speaking.
Sorry, that got me, Joe. Sorry, go on.
Well, you'd be surprised if you came around my office, I'm sure. So self-employed borrowers, as I mentioned, these are folks that either do own a property for their business or would be always open to hearing about owning a property for their business and maybe renting. So this is not just a matter of, hey, let's go dig through our files and see what we find. It's an ongoing way to find business. It's every time somebody new comes to you for a residential loan, keeping your ears and eyes open to understand if they also fall into the additional realm of maybe they can be a commercial client as well.
Right. Another reason why relationships are so important, and why everyone on this call is in such a good position to expand, because you provide that great service. It doesn't end when they sign, it doesn't end at the closing of one loan. And so if you've been building up those relationships over time, that borrower trusts you with other aspects of their life as well. It makes it so much easier to work with somebody you already know. So anyway, here's that slide you're talking about, Joe.
Yeah, really good slide. Thanks, Zach. Where you can, if your borrowers or you or your loan officers or you are the loan officer, do what we all ask, and that's fill in a complete 1003 with as much information as possible. You can come across some information without even really prospecting that hard. So you see on the lower left side, self-employed, very knee-jerk question is, oh, do you own? Would you like to own? If you don't own. Same thing for just simply commercial real estate listed in section 3 on the top right there. So if they're filling out their and this is a good thing if you're the broker, a good reason to implore upon your LOs, if you're your LOs, a good reason to do it yourself, of making sure that you're filling out these accurately, because you can uncover additional opportunities other than the one you're currently working on.
Right, for sure.
So keep these things in mind when you're dealing with your referral partner network. Are you providing value to them? And I'm not necessarily talking about, are you giving them leads back? That's definitely a part of it. If I come across somebody that needs a good accountant for their business, I'll certainly refer them to you. Of course, we want to do that. But providing industry information to them that might be helpful. Maybe we take them to dinner at KC Prime one night to show them how much they're valued. Scratching their back, and in other ways than just saying, hey, I'm going to pay you if I can, because we know referral fees are touchy for certain businesses. But provide value for them in all aspects of your relationship. And collateral. Zach will get into it later, but we have the ability to provide unbranded collateral describing the products in a way that appeals to your referral network, okay. And in some cases should appeal to the borrowers that eventually you're going to deal with. The theme, yeah. Oh, did I?
Oh, no, sorry. Your audio cut out for 1 second, but you're back to normal.
Okay. Okay, cool. Are you diversifying your referral sources across many different businesses and industries? Chambers of commerce are a good way to find additional referral sources other than the ones that even we listed. And then again, positive relationships. Listen, if you are in a very solid relationship with a referral source, it'll overcome troubles even down the road, and it'll position yourself better to acquire repeat business from those referrals and from those relationships.
And thank you, Joe. And the great thing, if you're interested in what sometimes you call like a gateway type of loan to commercial, is that 1 to 4 unit rental loan, DSCR loan. Different lenders call it different things, but that borrower, it could be the exact same person that you're working with, and for a different type of loan. And so that's a good way to kind of get used to the commercial process, the way the underwriting works, the way the appraisal works. And so in that sense, your referral source, could be the exact same person. It might not be anything for you to do besides just understand how that program works and which type of borrower might want to use it, which is kind of goes back to the initial slides in this deck. So anyway, thank you very much, Joe. I'm going to take over for a second and talk about marketing your mortgage business. So HubSpot put out a quote. This looks suspiciously like that Wayne Gretzky one that you always see, like skate where the puck is and so on. This looks like a marketing person's version of what that quote is, but it's true. Important to be where our audience is today and where they might be tomorrow. So you look at this slide and you say, Zach, I know this stuff. This is not anything new. And to that, I would say, yeah, I agree. But let's talk a little bit about each one and what is new that you could use. So attending trade shows. Now, with during the COVID lockdowns, this was impossible. Now they're back in full force. You can see Silver Hill at a number of these shows coming up this year, especially in Florida, in Las Vegas in August, in California, various parts of California later on this year. You can see us, say hi, please, if you do. And what's cool about trade shows now is that it's not just about handing out the pen. It's not just about standing behind the table. Now, depending on who you use for your giveaways, a lot of the collateral now with the QR codes, restaurant menus brought this back during COVID, but super helpful besides it just handing out your business card is if you have a collateral piece, the QR codes are free to use, and that can take someone specifically to a landing page where you can talk about your commercial solution. And so you don't have to lug around 100 printouts. You can use technology that you have available. A lot of tools now also have scanning technology. Even your giveaways can have scanning technology where it can take that person directly to your website, your social profiles. A lot more helpful than just being stuck, walking around a dimly lit exhibition hall or behind a table just shaking people's hands. Like, you can put your tools to work with you more at trade shows now. It's kind of exciting, actually, if you pay attention to that space. And meeting with lenders, obvious, right? But what I would say what's different is having the plan of knowing what specifically to talk about and taking what you've hopefully learned early on in this deck about who that borrower is and working out with your stable of lenders which types of deals they can and cannot do. And so I think this takes a conversation from being something like, so what are you guys doing more these days, or how was last month for your business, into, hey, I'm interested in these types of loans. I have these types of borrowers. They want these types of finance solutions. How are you going to answer that need for me? And I think that puts the lender on their toe a little bit, but it helps them frame their solutions in a way that helps you understand where to take your loans, because that's a big part of it, is understanding across that lender spectrum where these scenarios fit best. 3, calling clients, again, nothing new, but I think having the perspective of what to ask for is really important. On the next slide, I'm going to talk about email segmentation and how you can structure emails these days for them to be more effective. And I think calls work the same way. Starting with a case study, starting with a story, like, hey, did you read this latest article from Washington Post? Or, hey, did you hear about, the first quarter on commercial? Like, if you bring in information you with your referral partners, again, with former clients, with the lenders you're talking about, and you have the focus on pushing to commercial, I think you find that even those people who you thought weren't really doing the business actually are. And if they're not, they know people who are, and they'll be willing to help you. And lastly, creating the collateral. So this is tough, especially if you are a one-person shop, or you work with a small team, or you're just not naturally a creative person. That's totally fine. It can take a long time to try to make all this collateral yourself. It can cost a lot of money, and it just takes away from your primary focus, which of course is closing loans. And so fortunately, lenders like us create these tools for you and make it easy for you to customize and to use them right away. And so this is like product sheets with specific loan programs, the basic terms and benefits. And then like what we do is we print them or design them in neutral color tones. So it's going to fit with your logo, whether, your website's red or blue or yellow. It's going to make sense. And because naturally, you're not necessarily going to want to use the silver and orange of Silver Hill when you're marketing your business. And we totally understand that. So we want to make it easy for you. Other lenders do this as well. And I think it's a great idea to take advantage of what's already there instead of having to reinvent the wheel. So email marketing. If you work with Silver Hill, if you know us, we send 1 or 2 emails. Hopefully, they're helpful for you and they add value. But a couple rules that I think make a lot of sense. If you're doing email campaigns, most of that, when I talk to loan officers, brokers, originators, like typically you've got your email list, you're using Constant Contact or MailChimp or one of these tools, HubSpot, Marketo, to deliver your emails. And so if you're interested in expanding your business, describing what you do, the temptation might be to just send a blast with 38 different bullet points about all the different solutions you offer. And I just think, that today that's not as effective. More important would be to segment your audience. Now, and by that, I mean, if you have the ability, looking at your list, the emails you have, the referral partners you have, the former clients, and separating them out and sending specific emails to specific audience members. I think the things that you would want to say to any accountant you might know would be a lot different than an investor. And so if you can get laser focused on message and audience, I think you'll find a lot more success with your email marketing. That's what we're trying to do these days. Of course, the golden rule, we don't want to send emails that we wouldn't want to receive ourselves. And I think that goes for all of us, because if your inbox is anything like mine, it's just filled to the brim and you can't answer them fast enough. And so you want to be adding a lot of value. How to add value, I think, is to make it less about you, the sender, and more about the recipient. So I think the wrong way to say, hi, I'm John from ABC Mortgage. I do this, I do that, and I do the other. I can help with this. We like this type of business. Let me know if you're interested. More important would be like, we help you accomplish the following things. 1, 2, 3. Now the reader is seeing how they benefit. And that's all anyone ever cares about. What's in it for me? And I think email, all too often, they're like billboards for ourselves. And no one really cares about us. What do you think about it? Personalized when possible. These days, even the more inexpensive programs give you a lot of possibilities when it comes to personalization. The stats are out there. If you put the recipient's name in the subject line, they're more likely to open it. If you put hi and a little bit of code to fill in the recipient's first name, they're more likely to click. A little bit of personalization, and don't overdo it, because then it's pretty obvious that it's fake. If you can get that, if you can mix that into your emails, it takes about 2 seconds to a minute or 2 to learn how to do. It can be very helpful in order to get the attention of your recipient. And lastly, clear call to action. I think the newsletters are super effective, and I really like a good newsletter. But if you give 38 different buttons to click on, you're not giving a clear message to your recipient. I think if you had a little bit of difficulty getting people to engage with your emails, if your click-through rates are low, I would suggest focusing on one specific thing to tell the recipient to do. Go to this page, sign up for this thing, give me a call at this number, and just leaving it at just one. And so if the person doesn't do it, then fine. But there's no excuse that, they just got confused or distracted because there's so many different things that you ask them to do. Read this blog post, go watch this video, go email me. It can be too much for the recipient. And so I would suggest that you create a very clear, simple thing for your recipient to do, and see what happens there. Social media marketing. We've been talking about social media for a very long time. Opinions have changed. A lot of these icons used to be different. We used to be talking about things like Google Plus. Remember that? And so it's always changing. These are a lot of the tools. We've had someone on our team asking about other types of tools like TikTok, and there are a lot of fascinating social media platforms out there. What I have found, and what we have found as a business, and what I do a lot of research in our space, other types of lenders, other originators, it seems like the most effective tools are LinkedIn and YouTube. LinkedIn, obviously, because these are where people live in their industry, how you can target people based on their job title. Much easier to engage and speak with people based on your shared interests, much more than something like Facebook or even Twitter. And then YouTube, because like we put our videos on YouTube. we embed them on our website so people can click on our website or they can see us on YouTube. Beyond just webinars and things like this, you see a lot in our space of just your simple talking head type video where someone's in front of a camera and they just speak for 45 seconds, but they're talking about a new solution, some new value they're adding. It can be really helpful, and it kind of stops you in your track as you're scrolling through LinkedIn. All of a sudden, someone's talking. There's motion. There's sound. It's engaging. So if you've got the budget and you have some ability to do that, video is still very important, and YouTube is generally the place to go to host those videos for you. So to kind of hammer this home, LinkedIn is really where we invest our time these days, and where I suggest other people in our space. I get, brokers ask me a lot of questions about marketing. I say, before you try to get on every platform, let's do one really well. And then if you can do one really, really well, then, and you think you've maximized the value you can possibly get out of that tool, then I would say, well, let's think about another one. But most of us, if even my LinkedIn profile, I get that notification every time I log in. Oh, your profile is only 67% completed. Like there's steps each one of us could take probably to better use that platform. And so my advice would be to really focus in on that. If you want to invest in mails, like paid campaigns to get in front of more people in your space, referral partners, things like that, I would do that before I'd invest time and money in creating a brand new account on a platform that you don't understand yet. And so whenever using social, and this is the last thing I'm going to say about marketing, these are basic tenets that work pretty much wherever you're going to be, but specifically on LinkedIn. And one is highlight your client success stories. You might call these tombstones, you might call these closed loans, whatever. We generally will call them closed loan stories or case studies. It's just so much better than talking about yourself, is talking about the success those around you are achieving, because people can put themselves in those shoes and say, oh, well, if this person could do that for this investor, I'm a lot like that person, and they might be able to help me too. And so it's just a more effective tool. We've all seen those posts that say, oh, guess what? Now we offer this program. Now we offer this program. Now we offer that program. It can get exhausting, but if you tell stories, that works through a different part of the recipient's brain. Educational resources, super valuable. You know more today than you did, earlier today, if you've been on this call. And so just like continuing to learn and then passing on that knowledge to others is very important. I think we're volatile times right now, and a lot of people are looking for a solution, looking for an answer. And if you have an answer, if you can have that sense of authority, it's very valuable in the type of industry we're in, where everything's so relational. So, and lastly, just staying connected. We know that people change jobs all the time in our space. People move around. Your email database is probably less healthy than it was 2 years ago. But what's probably the same is your LinkedIn profile. You've got, or if anything, it's grown. And so that's a quick way to get in touch with people. Maybe a referral source that you used on that commercial loan you did 3 years ago, and then you just decided that you didn't really need to do it because you had so many other types of opportunities. If you try to email that person, that might not work. But through LinkedIn, they're still going to be there. And that's just a great way to connect with people. And also the numbers show, and I'm not gonna make up a stat, but in-mail open rates are way higher than email open rates. So if you've really got to connect with someone, sending them a message through LinkedIn, granted, assuming you have the ability to do so, is going to get seen a lot faster, a lot more effectively than a standard email, especially these days when our spam boxes are so powerful. So hopefully that gives you a little bit of insight into marketing today. There's so much more to talk about. And throughout the rest of this year, we're going to do regular presentations, really drilling into specific aspects of marketing. I've got an awesome team here at Silver Hill and some real specialists who could talk to you about the best type of subject line to send, how many words is too many in a headline, like what's the most effective type of call to action. We could get really focused in, and I want to do that because I think there's interest. There's more of an overview here about how to take what you've learned about sourcing commercial loans and putting into practice as fast as possible. possible. So with that, I'm going to throw it back to Joe.
Good toss, Zach, and thanks again. So we'll finish up with talking about why us, why Silver Hill, what is the difference? Well, diverse options. Diversification is the key word in 2022, and we don't have to tell you why. But to be able to help small business owners in addition to consumers, it gives you the ability to diversify your ability to thrive in a market that's not definitely inducive to making a lot of money in the way that you did in 2021. Flexible funding solutions, we can fit a wider range of borrowers, gives you, again, another way to say yes when you might have traditionally said no. And these are folks that either don't meet or would not be inclined to go through the rigmarole that the bank tends to put the borrowers through. And our service is strong. We've been around since, as a company, 1993 for Bayview, and we've been doing it a long time. So we've perfected the way that we do commercial business, and I think you'll find that when you work to us. As you get set up with a commercial or an AE with Silver Hill Funding, you will find that there are some great programs out there. And just as Juan talked about finding the right borrower for us, within us is a lot of different solutions that we can provide folks, from a full doc solution. But we see a lot of folks fall into the light doc, no doc, and bank statement programs because of the fact that they don't have the ability to go full doc, and that's why they're with us in the first place. But we still do a fair amount of full doc loans because of the fact that borrowers are either locked out of the bank, just maybe because of the property type, maybe the loan amount's too small, and they come to us and have a solution that they can deal with. But your AE will walk you through the details of each of these programs as they pertain to the specific situation that you bring to them. And that would be my recommendation, is that you use your AE as a resource rather than try to be an expert before you send us a loan. You'll learn as you go. For the folks that have not done these, for those that you have done them, you will get better and better at them as you go through them.
Yeah, and we're going to say that a few times as we go through these program slides. Talking to your AE is so important. I've got a lot of specific questions here about specific scenarios, and the best way to get that quick answer is to connect with that AE who can work directly with you. If you don't have one, or you don't know who that would be, go to the contact us page on silverhillfunding.com, and you'll find out right away who you can call, who you can email, who you can talk to.
And those emails go to me and Zach, so we will be personally guaranteed that they will be responded to. So let's go through every single box on this slide. Or we don't have to. But this is a good visual, just glancing at it, that you could say, wow, there's a lot of stuff that Silver Hill has the ability to offer their borrowers, and there is. And so rather than us doing what I joked about a minute ago, this is, when you get this presentation, this is a really good thumbnail to have, something to put in the file, in the Silver Hill file. And again, don't try to memorize it. You can walk through scenarios, and your AE will help and work with you to decide, hey, what should we recommend to our borrower based on the situation that they present to us. So it's a prescriptive type of page where you can use it to help you prescribe the best solution, but you can work with us to do so. So we're not asking you to come with us, to come to us with the situation or with the scenario and have all the answers. That's why our AEs do what they do, and they're good at it. So keep that in mind. Earmark this slide. It's probably, has the most information on anything that we talked about today from a product standpoint. So it'll be very useful to you moving forward.
Exactly.
Some good examples, when you meet people, you like to put faces to the names. We like to put pictures to the loans, and we also like to put income to the loans. What I mean by that is what the broker made on these particular loans. So you have an automotive property in Maryland, $1 million loan amount, very nice looking property. Automotive has some catches that we have to look out for. We have to make sure they don't have in-ground gas tanks, and there's considerations about oil tanks and so forth. But again, your AE will walk you through those guidelines. But at the end of the day, if we are able to do it, you can see that it's a very lucrative situation. So we'll talk a little bit about how you make that compensation of $25,000 in a second. But fact of the matter is, for $1 million loan, that is not a lot to ask, and it's a nice payday at the same time. In Atlanta, we did a nice office building. Again, $26,000 for the broker, a 5-year arm on that particular property. That, looking at that property, that's something I would think a bank would do all day, every day. But again, it comes to us for a variety of reasons and for why the bank can't do it. And then in Texas, a warehouse. So about half the loan amount of the first deal, but a very similar commission for the broker. It all comes down to the specific situation. In commercial, you're not tied to the comp elections like you are in a residential loan or with a residential lender. So as you will see in a slide or two, there's different ways to structure your comp from a loan to loan basis.
Exactly. Cool. So I think with that, Joe, we've got our second and final poll question, and we'll be quick. I'm going to throw it up right now. So are you seeing those types of deals today? We'll make it quick here, but recently I added that third option because I think there are a lot of us out there who say, oh yeah, obviously I drive past that office building every single day, but I don't know if that's the right type of deal that I can take to you or with a lender like us. And so I think that a bit of extra color is needed. And sure enough, I can see just about 40% are saying, yes, I think I am seeing those scenarios, but I need some help to know what to do with them. And nearly everyone else is saying yes. Very, very few, if any, are saying no. So very encouraging, because what we can tell now is that more than half of the people on this call have not done a commercial loan, but the over 95% are seeing these commercial scenarios. So hopefully you've learned a little bit more about how to close those and hopefully how to close them with us. And so I'll close that now and give it back to you, Joe.
Awesome. So I mentioned point structure. We have the ability on a case-by-case basis, unlike residential, where you typically say, this is my pricing structure, and you're held to it unless you change it for every single loan. On each particular loan, you can decide how you want to earn up to 5 points. Full transparency, not a large percentage of deals end up with the broker making 5 points on our deals because you have to remain competitive, but we do allow that on a case-by-case basis. So we allow up to 3 points in origination fee. That's an upfront disclosed fee on the settlement sheet, and then an additional 2-point yield spread by buying up the rate for a total of 5 maximum. So again, on those $25,000 commissions you saw, they were usually a mix. They're typically a mix of some upfront points and some yield spread. One piece of advice is don't put all of your eggs in the yield spread boat, because if we do need to we need wiggle room to make the DSCR work on a particular deal, debt service coverage ratio. One of the things we're going to look at is bringing the rate down by reducing yield spread if there is any in the deal. And by golly, if that's all you're going with, you're going to work very lean on that transaction. So commercial borrowers will expect to pay a origination fee through their broker or lender. So, and we don't charge one, so that gives you more leeway to charge what you think you're worth, and you are worth a ton. So, by the way, that privacy statement, we pay the yield spread outside of closing. So they are only going to be aware that you're making whatever that origination fee is. So keep that amount in mind. So if you can aggressively sell a slightly higher rate, you can make a little bit more money so long as the debt service coverage ratio pans out. And again, Zach talked about personalized collateral, so keep him in the mix there. So this is another slide to earmark. What do you need from us? If you don't see a deal within a week, and I can explain this till I'm blue in the face, you're going to forget everything anyway. So keep this nearby. But we do want to highlight the simplicity of submitting a deal for a letter of intent, or what we call an LOI for short. The same application, a commercial application or a 1003 that you're familiar with, And we also have a loan supplement form if that's the route you go. Credit report, you're used to doing those. And a rent roll for multi-unit properties. And that's a little bit different than you might be used to. You see some other things, if applicable, like a P&L and an operating statement, tax returns if we're going full doc route, purchase contract if that's applicable, and bank statements if we're going a bank statement or full doc route. So good checklist here. We could require as little as 4 of these or as many as all 8. But again, the checklist will be right in front of you. Your AE can work with you to highlight which items that you need to submit to us.
And we've got a sheet that has just this information, a very attractive visual format that your AE can send you, so you can keep it right on your desk. Really easy.
Awesome. Cool. So if you're approved, get in touch with your account executive and discuss the deal. All right. These loans are not submitted through Helm, and Helm would make sense if you're a residential broker. These are a different process. So contact your same account executive and they can help walk you through some of these scenarios that you have. If you're a Silver Hill funding broker already, again, call your Silver Hill funding rep, your AE, and you can go on our website and learn more. And that's my contact information at the bottom. One of my roles is to onboard new folks. So don't be bashful in contacting me to get onboarded, because that's certainly a job description item of mine. So you have my information at the bottom of the screen. It'll be emailed to you. Feel free to reach out today and say, hey, hook me up, Joe, get me on board, and we'll get that process started.
Awesome. And so this is our last slide. We've got a lot of questions, some questions about licensing, some questions about which states you do business in, a ton of questions about, specific types of scenarios, and then also questions about marketing advice. And so what the good news, even though we're out of time, is that I have these questions. I'm going to connect each question with someone who can answer it. Typically, that's going to be the account executive, and someone can spend a lot of time working on those questions and any other you might have. The big thing we want is for you to reach out and make that connection. So much of this process, especially with commercial loans, is relational. So the slides, I think, are a great start, but really you're going to learn more about commercial lending. You're going to learn more about our programs, and not just us. It's really about the whole industry. Our AEs can help you with. There are certain types of loans that we can do and certain types we can't do, and we want to make sure which is which, and that you have somewhere to go with all the opportunities that hopefully you're going to be getting very soon if you don't have them already. So, Joe, thank you so much for taking the time. I think it's really valuable. Juan, thanks as well. Everyone on this call, really appreciate it. I hope you have just a great holiday weekend, and we hope to be hearing from all of you very soon, so we can start doing business together, or do even more business together, would be great. So, Joe, thank you very much. Any final words before we sign off?
Just a thank you as well. Really appreciate the time today, especially so late in the month, and really great turnout. So really excited about you folks doing some business with us.
Awesome. Okay, everyone, have a great, safe weekend, and we'll be in touch very soon. Goodbye.